Hey, everybody, Tom Gentile. Welcome to our midday report. It is Thursday, April 30th, 2020. Glad to have you here in the house once again. Today, let's see what's going on in the markets. Well, we got jobless claims that came in. There's no surprise there. Millions more jobs lost. I think the total is now over 30 million jobs lost in the U.S. And I believe that's for the month of April alone. So not good on that front. And to add to that frustration, the ECB there have been discussions over on ECB talks that have been negative today too. And that's what's weighing on the markets. As we all went to bed last night, we had markets that were up. All right, up after Facebook's earnings, up after Qualcomm's earnings. Qualcomm did an about face this morning. Facebook's come off of its highs as the rest of the market is not experiencing the kind of revenues that some of the tech stocks have. And so that's why you saw Dow down almost 400 points this morning. Eased off the lows a bit, but still obviously under pressure. Let's take a look and see what's going on. I have several things I want to cover with you this morning. So let me share my screen with you as we start the day. All right. And so let's take a peek here real quick at what I'm planning on doing today. So my headlines for today, we talked about. We've also got daily and intraday market averages. I'm going to focus on intraday market averages again in SPY, TLT, UUP, USO, GLD. Also stocks on my radar today. It's the two A's. It's the two A's of FANG, and that would be Apple and Amazon. And then I want to finish up our session this morning talking about trading seasonal patterns. All right, seasonal patterns. And so let's go ahead and get rolling. All right, so I'm going to slide over and we're going to take a look at what we got going on right now. This is the SPY. What we're looking at here is a 5-minute bar chart. And this is the start of the day where we dropped down and we hit our lows for the day about 5 minutes into the market. Since then, we've come back up. We've come up. We've kind of tagged the upper end of this. And now we have upper and lower end, 292.15, 289.58, as we are just past the 11 o'clock hour here on the East Coast. Let's take a look and see what the other instruments have to say about what's going on in the market today. So TLT, this is a really interesting one right here. All right. TLT actually started a little bit higher on the day. And then within the opening, we went up into around 10:30, and at precisely 10:30, we bounced off the highs of 169.23 and we crushed through the lows at 168.70, currently trading right around the lows right now. And so that's not something you see all the time. When you see the markets down like they are, that you would see the bond market drop into its 1 hour lows. However, we are only down 0.04% on the bond market. So I would have to see some significant move downward before I get a little bit nervous that the bond market is telling us something different than we see in the stock market. Typically what happens, and you guys all know this, if the stock market's up, typically we see a pullback in the bond market. If the stock market is down, we typically see a run into bonds. And that's just not the case right now, but the day is still young. Let's take a look and see what's going on with UUP. And UUP, this may be the concern right here, is that that the U.S. dollar and the double dollar index we're looking at here right now actually dropped off of its lows just in the last 15 minutes at 26.89 and is down into the mid 26s. If you remember, when we looked at Monday's chart, we were talking about a U.S. dollar, a UUP market where before COVID-19, we were trading 25 half, 26 half, 25 half, 26 half. After COVID-19 became a regular occurrence, we jumped to 26 half, 27 half. Now, we are at 26.80 right now. So we're still in the 26 half, 27 half area, but it's been a while. And let me just bring up a daily chart up so I can show you what I'm talking about here. look at this. The last time we were down in the 26s, you got to go back to the middle of April where we came down and we hit this 2675 area. So that's an area of support based on the lows that occurred back in April, right? High was a week ago, 27, 26, and we may be in this range here for the time to come. Finally, or not finally, but let's take a look at USO. USO is having a little bit of a buying binge here in the last couple of days as, again, there's some more news that's coming out regarding USO and regarding the oil markets and stiffening up, all right, propping up the oil markets, which is why we're seeing USO up another 5+ percentage points today. Again, I'm not long oil right now. I have some short spreads that are really deep in the money on USO. And so, and deep in the money would be, I got to tell you, probably around 30 is where I'm at right now. So I'm at 30 and I'm at 38.30, I think is where my spread is now. And so we've got, it's kind of make a little big move up into the 38.30 area for me to start to see that come off. But right now I wouldn't be bullish or bearish. I would hang out and wait if I wasn't already bearish and start to add to bearish positions if this rolls back over again. And I believe it will. Okay, so last one let's take a look at is GLD. And as you can see, GLD, I mentioned this too, is that, and I'll say it again, I like this. This is one of the areas that I like in assets, in alternative assets. I think it's one of the safest places to be. And I have been actively selling puts every week now for the last several weeks. I've still not gotten any GLD. Now, if we are below 160 tomorrow afternoon, I'll get some GLD. But this just hasn't been the break for me in terms of getting GLD stock. So I'll just keep selling puts until that changes. All right. I want to show you one more thing you can look at on the Thinkorswim platform. All right. I'm not a big endorser of brokerage firms. I think that's something that you yourself have to find something, a brokerage platform that you feel comfortable with. I use Thinkorswim for the charting, right? I don't use it to trade with, and there's no reason I don't, other than the fact that I've got other brokerage accounts, and I just, maybe I'm too lazy to open one up with Thinkorswim. I don't know, but I use a couple of other ones. But I do love the charting that they have here, and the one other thing I want to show you is what they have, which are rolling futures contracts. And rolling futures contracts give us an idea of where the asset is, and you might say, well, why not just look at the asset, Tom? Well, because a lot of these assets shut down at 4 o'clock. And if it's 8 p.m. or 11 p.m. or sometimes 2 a.m. and I'm up and I want to see what's going on, I will check the 24-hour markets. And I want to show you one that I haven't discussed on here lately or before, and that is /BTC. This is the Bitcoin futures. And we're looking at the May contract. And the reason I want to show you the Bitcoin futures is because I want to take you back to this is a daily chart. This is Bitcoin back in mid-February when we were trading above $10,000 the coin. Then COVID came along and everybody bailed out of Bitcoin for all of about a week, where we saw this big drop down to 42.10. Now, the Bitcoin futures are trading above the actual price of Bitcoin. Bitcoin was around 4,000 at this time. But this is a really good, highly correlated chart if you like to look at this inside of your broker's platform instead of actually going out there and looking at Coinbase or one of the BTC platforms. But from here, we've caught a bid. Yesterday was really an interesting day because we went from the 7,000s up to 9,500 at one point and then pulled back. All right. Now, Bitcoin futures are showing us up 90. However, there was a big snapback here that happened, yesterday, late last night, and we may have caught a little bit of a high, but I do believe long term we see Bitcoin moving higher, right? And one of the big reasons is because something that's going to occur on May 12th. May 12th, we're going to have what's called halving day. Halving day means that rewards going forward after May 12th are only going to be half of what they are now. So if you're digitally digging for Bitcoin, if you strike Bitcoin, you're only going to get half of what you were used to getting before May 12th. All right. So the reason I say that is because if only half the rewards are coming in, doesn't that mean that there could be a pop up in Bitcoin? I believe that could happen. Okay, so Dash BTC is one of the ways I look at this. And then, of course, you could always go over and bring up Coin Market Cap. That's a good place to go. Let's go over to coinmarketcap.com. Wrong one. Coinmarketcap.com. And then what that does is actually shows you the top 100. You can see here Bitcoin 88.73. It's up 6% in the last 24 hours. Right, last 24 hours we see that. All right, perfect. If there are no other charts on ETFs and indexes I need to look at, then I want to move into another area, and that would be our stocks in the news. There are no two stocks more important after the close of today than there are with Apple and Amazon. So let's take a look at both. What I want to do is I'm going to bring up a chart of Apple right now. We're going to look back at the day charts. This is AAPL coming up on the screen. And you can see with Apple, we had a high of $327.85. That was back in February. All right. Actually, it was the end of January when that high was hit. All right. We came close to it in February, and then we dropped all the way down to a low that put us right down at 212.61. From there, we've been on a move higher. Okay. Apple's earnings are coming out today. If you take a look at earnings whispers, you're going to see that here's the whisper numbers. Whisper numbers for Apple is the consensus is 209 a share on revenue of $54 billion. The earnings whispers coming in at 225. So the earnings whisper group expects this number to be higher than the consensus. All right. So at that point, let me just ask you the question, folks. Do you think Apple's going to come in above or below their consensus? Do you think that Apple's going to sell off or rise into or after their earnings report? All right. Now, I'm a pattern guy. And what's interesting is that patterns coming out of earnings, at least for technology, have been completely the opposite of what they've been doing quarter after quarter. We see okay earnings reports, and we see the markets skyrocketing. Facebook is another example. All right. They had a miss. They were on the low end of consensus, and yet the stock jumps. And I think the reason why is that a lot of money managers and a lot of people in general are looking to put their money somewhere. And so what we're seeing is we're just seeing anything that sticks is where people are going to go. And they've been hearing the story of technology now for weeks. And so, you look at a Facebook, and let's just go take a peek at Facebook. And I want to look at the 5-minute chart. So if you look at FB, you can see, well, we don't have to look at a 5-minute chart. Take a look at this. The gap up. We were trading very close to 210 in the after hours. And so from there, we opened, we spit up real quick, and now it's starting to sell off a bit. Again, look at that low that's in, because that's an area that's going to tell you whether or not we're likely to hold and where the overall market's likely to go. Okay. Because just before we started this conversation at 11 o'clock, Facebook was just coming off of its lows for the day. And we were around 203.5. We're at 205. So it's starting to make a little bit of a move to the upside. But I would be very careful if we get below and close below on a 5-minute bar, this 202.89, right? Because then we're talking about possibly filling the gap. 175 was expected for these earnings. They came in at 171. and yet still quite a bit of a pop on that news. Okay, so does Apple follow that same thing? And right now, I see a couple of you saying sell off, sell off, sell off. More of you are looking for sell-offs. Is that because the phone is because we're not able to get into the store as much? I mean, you can order the phone online. I've ordered the phone online, but I got to tell you, anytime you want to, I know people that just simply want the Apple tech to dump their data from their old phone to their new phone. And you just see that in that store. You go in that store and you already get this feeling like of FOMO, that you're missing out on something. And whether that's the phone or the watch or all the accessories, they don't have that now. But what do they have? All right. They have digital services. They have online services. They have subscription services. So it's going to be very interesting to see what Apple ends up with. How about we take a look at the options real quick on Apple? And we see where Apple's coming out in terms of options. And so I'm going to go to option chains. And the reason I do this is because I want to get a read on where this stock is slated to go after earnings. So the way I do that is I get right in there and we're going to look right at the 1%. All right. The 1% options, the ones that are at the money. So if Apple's trading at 290.64, I'm interested in what the 290 calls are trading for. Where's my, it's not there. The 290 calls are trading right around 660 by 665. The 290 puts are trading 595 by 6. So if I took those and put them together, that's about $12.60. All right. So Apple is slated to move about 8%. All right. They're expecting an 8% move on Apple based on adding the call and the put together. And that's a rough estimate of what Apple's likely to do today. All right. Amazon. Let's go ahead and take a look at the whisper for Amazon. And to do that, I'm just going to pop on over here and put it in the ticker. All right. Here's Amazon. Now, Amazon, completely different story. 684 is their whisper number, even though the consensus is 636, because Amazon is not shut down. I am a little bit concerned that Amazon, even though they're still rolling heavy, they've got, they're still delivering. I know my wife is still buying, but there are some things on Amazon that you just cannot get right now. My brother-in-law is a manufacturer, and he sells, one of his products is on Amazon, and they put him on hold until further notice because they deemed his product not necessary. So again, here's another one where, it really could go either way. Let's see where Amazon, now Amazon is, this stock's on fire right now. If you take a look at where it's been in the last couple of days, AMZN, you can see 24.44.98, was the high for the day. And if we go back and take a look in the last couple of days, so let's take a look and see what's going on in the last couple of days. And you'll see here, 24.61 is the all-time high. So we're getting up here into areas we just haven't been before. And I have to wonder with Amazon, if they truly are going to come out with numbers that are going to be better than they had a quarter ago. And this is when the economy was, rip-roaring. The other thing I'm curious about is where that buffer is going to be, where the option traders believe this is going to go because it's trading so expensive. So that takes me back over here, option table. And this time what I'm going to do is I'm going to take a look at Amazon. So I'm going to put in AMZN. I'm going to update this. Now we're looking at the top 1% of Amazon's options. And we're really going to be looking at those 24.25 calls, which are trading 77 by 79. And the 24.25 puts, which are 73 by 75. So this is roughly $150 to buy the straddle, okay, to buy the call and the put. That's also telling me that they're expecting Amazon to move 150 points off at the close today, either above or below. That's the range, all right? That's the range that the expectation of Amazon of where that's going to hold, 150 points above, 150 points below. But if you look at the May options, Look at the options. I mean, what could you get for $1 on Amazon's puts? Well, for that, I'm going to have to come all the way back up here, and we're going to have to push this out. Let's push it out 30%. Let's see what 30% gets you with a day to expiration. Well, not much, 4 cents, but I'm looking for $1. You come down, you come up a little bit here, and you get closer to the strikes that are out there. Here's the 1817s, okay? 1865s, 1885. How about the 1900s? I mean, they're all over the place, okay, because they're just not trading. You got to let's get into the 2000s. Does a 2000 put give you something? 55 cents. Is Amazon going to drop below 2000? Man, if it did, if Amazon went from 24 something to 2000, what do you think the rest of the market's going to do? It's going to be crazy. All right. How about 2100? 164. So you're telling me that you can sell one put option in Amazon, take in $1,640, and that could expire tomorrow? That's exactly what that means. Okay? Very high probability, but at the same time, there's quite a bit of risk out there as well. All right. Just wanted to throw some of those out there to you guys, those of you that are looking at these. I know there's a few put sellers out here, and I wanted to share that with you. Let's get into the final topic I want to discuss, and that is looking at seasonality. So I've got this product on my software called the Money Calendar. Basically, what we do is we go out and look at 10 years worth of data. From there, I start looking at option trades, and this is something that I have a patent pending on, a utility patent on, because it's just such a valuable trading strategy for me. So I want to walk you through how we look at this. So I can look at it at a monthly view, and this gives me an idea of what the entire month looks like. Then from there, I can go in and click on any calendar day in the month, and I can bring up the daily view, and it shows me what's hot and what's not. Okay. And then from there, I can just roll forward and click on any symbol, and then it gives me detailed information about what I'm looking at. So for instance, this was last year's Amazon. And so in the month of June. And so it showed a trade in Amazon. Where is it going? So I look at where is it going to go? How long is it going to take to get there? Okay. Based on patterns that are 90% or more accuracy. The next thing I do from there is I go out there and I'll look at an option trade, and I'll plan my option trade around step one. So based on if I can find where's it going and how long it's going to get there, that's all I need to do to plan a successful, low risk, low cost option trade. And so I will compare buying 100 shares of stock versus buying call options and buying call spreads. If I'm bullish, if it's a bearish trade, I do the opposite. I look to the downside. And then from there, it's just a matter of, placing that trade and then following up with that trade. So let's take a look at some case studies using today's money calendar. So I want to find a bull and a bear to leave you with here for today. So that's going to take me over here, and I'm actually going to go to my tools, and I've got a tool here under the Complete Trader that's called the Money Calendar. I've got several tools in my money patterns, but I'm going to click on Money Calendar, and I can see here, here's April. All right, here's the last day of April. Wow, okay. So how is this green and how is this red? This just shows patterns. And so as of today, we've got much more bearishness going on than bullishness in the market. So it's not going to be hard to find a bearish trade. It's going to be a little harder finding a bullish trade, but they're there. So I'm going to rank this by trend, or what I like to call power meter. And my power meter comes up and it tells me, all right, you got a couple of them here that look pretty good. So we've got BKNG, that's Booking Holdings, that's a bear. And then I've got Chipotle, which is a bull. I've got United Healthcare, which is a bull. You can go through here and you can look at several of these. What I'll do is let's take a look at United Healthcare, as is a good example. So United Healthcare, UNH, shows that I have a 28-day bullish pattern that's coming on today. 100% accuracy over the last 10 years. Average profit, $6.12 for each pattern. So this one's one worth looking at. So I'll click on UNH, and I see the trade length. I see it right here. Here's the April 30th start day. Here's June 8th is the end of the pattern. Then I've got some information right here. It tells me how much some math on the pattern, the net profit, the duration of the trade, the average profit, its 10-year accuracy, the drawdown, how bad did it get in the pattern, and how good did it get? All right. And then I can see here every single day this pattern's been in force. So do you see this? As we get closer and closer, this was 2010. This was last year. Every year, this pattern's gotten better and better. Last year, it made $14.81. And I'm going to click on it and show you what I'm talking about, because when I click on the pattern, it shows me last year's chart. It's just trading above 225 at the beginning of the pattern and was trading near 245 near the end of the pattern. So this is a good looking pattern to take a look at. All right. And the fact that it's healthcare and we're in the middle of the situation we're in right now, that doesn't hurt either. So at this point, what I'll do is I'll move over and I'll create a trading strategy off this. So let me type in UNH. Now, again, what are we looking at? Let's follow the rules here. All right. Where's it going? Well, it says up 612 out of an average trade, but you look at the last couple of years, we're looking at more like an 8 to a 10. All right, so let's look at 10 points up and make it round and easy. When's it going to get there? Well, that's this part right here, by June 8th. All right, so what we want to do is we want to think about options that expire after June 8th. I think the 19th looks good because that's a third Friday. And then I want to look at 10 points above where we are now. So we're at 2, is this right? 291. 291. So really like the 300s, even the 303, the 290, 300 looks good. So if we look at now, we could buy the 300 calls, but that's already 10 points away, and that's not going to help us. We could buy we bought the stock, we paid $29,000 for 100 shares, all right, to make what? 10 points, to make $1,000. We could buy the 290 calls. They're going to cost us $14.10. All right. But if our target's at 300, how much can we make there? I would look more at a spread where we buy the 290s and sell the 300s. Okay. Let's take a look at the risk graph on this. Now we're looking at something that has a $5.45 or $545 cost that can make as much as $455 on this trade between now and June 19th. Limited return, limited risk. Risk graph shows that if we're wrong and we go back down into the low twos, the most we could lose on the trade is $545. If we're right, and it just goes up a little bit, all right, goes up there above that 310 high, or the 300 high, which, by the way, was only a couple weeks ago after earnings, then we're in the profit zone and we're approaching max profit if this happens as we get closer to the June 19th expiration. All right. Let's look at a bear. All right. I see a question about trends still hold the patterns in the midst of COVID-19. This is a COVID-19 pattern right here. It's just a matter of finding something there, because there's several different trends. I would not take a bullish trade in the airline sector right now. I would not take a bullish trade in oil and energy right now. But if you look at the patterns that are going on, let's back this thing back up to the day. And if you look at power meter, all right, what's bearish? Booking holdings, that makes sense. No one's booking any holdings. Dick's Sporting Goods. I'm not out buying sporting equipment. In fact, Dick's took the guns away from us. Shame on them. They might have actually had some more sales had they not done that. So you look at that. VLO. Let's take a look at VLO. April 30th to June 2nd. All right, this is a bearish trade. Now this one actually looks like only an 80%er in the last time in the time frame. So we'll back up and look at the day. All right. Once again, let's flip the power meter a couple of times. You know what? Bookings on here, and I like this one. The problem I don't like with it is the spread's too wide right now. So that's one that's really a tough one to follow. Let's look at Dick's Sporting Goods. April 30th to May 19th. All right. Where are we going? Average is about 4, looks like about 330 to 4 points on the average there. Okay, so where's it going? How long does it take to get there? May 19th. Step 2, you go out and look at an option trade. DKS. And then we're going to see what they look like on May 18th. So we need to go out to like the May 22nd options, get ourselves a little bit of breathing room. And we can see that the put options on the May 22nd, those May 30 puts, even the May 31 puts, they're trading at, the May 30s because we're at 30, right? Those are trading for $1.70. So if we're expecting, say, a 3 to 4 point move, let's call it 3.5, then this put option, if we do make the 3.5 point move down, all right, this put option, that takes it to 26.5. That puts the put at a $3.50 intrinsic value. All right, that's more than double the $1.70 that we see there. All right. So again, this one would look like this. Let's go hit a risk graph on this, and you can see this. The May puts, the May 22nd puts are $1.70, and there's your risk graph. And like I said, if we go down into that 26.5 area, this is where you end up at on the graph. You end up with a stock that actually doubles in value at above just around the 26.5 area. Okay, so that's what I wanted to share with you guys. Is I want to share a little bit of money counter with you, and show you how I look at seasonal patterns. Okay, want to mention this as we finish up on the day, and that is that again, what did we do today? We took a look at stocks, bonds, currencies, commodities. Apple and Amazon are on everybody's brains right now, and then I showed you some seasonal patterns using my patented money calendar software. Hey guys, tomorrow we get in here. It's Friday. I thought what I'd do tomorrow is look at some short-term trades, some Friday trades that come on and go off on Friday. I can't guarantee that I'm going to see anything. It's whatever the patterns suggest. So I thought we'd take a look at that. And I want to remind you, starting next week, I'm going to one a week in the room here. So I won't be on every single day, but I'll be on Mondays around the same time frame. And what we're going to do is we're going to look at the weekly moves that are happening in the marketplace. And finally, I have a very special event that's coming up that I am inviting all of you to. All right. You're going to hear about that this weekend. I'll give you a sneak peek and give you the early access into a webinar that I'm going to be doing, which is going to be building your own trading system. All right, how I build and backtest and trade one of my favorite and one of the most profitable trading systems that I have right now, using trends. All right, so I'll be giving you the link to that tomorrow. So hope you come back tomorrow. You'll get that link. It's an invite only, so you have to join that link in order to get in. Guys, have a great rest of your day. I'll see you tomorrow. Bye now.